Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 20th of September. Gold remains range bound. It's moved sideways this week. It looks like it's tracing out a small pennant pattern. I'm expecting we may see a bounce up to about 1529 or just some sideways movement before the downward trend resumes. The bearish wave count for gold still expects a major high is in place. A new trend to last 1 to several years down may have begun. I will have confidence in that view. A price makes a new low by any amount at any time frame below 1346.45. I still have a bullish wave count as well. It expects a primary degree fourth wave is going to continue lower to form a large consolidation to possibly end in a few more sessions. The weekly chart level. This is the main wave count for gold. I still expect gold remains in a bear market. This has some support from classic technical analysis. It also has a much better fit in terms of Elliott Wave. It sees a super cycle degree B wave possibly complete here as a double zigzag. The first zigzag in the double is labelled cycle wave W, and from this low to this high, this upward movement fits extremely well as a zigzag labelled 535, labelled A, B, C, and B is an expanded flat correction. They subdivide 3, 3, 5. They're fairly common, particularly in B wave positions. This upward movement fits much better for this bearish wave count than it does for the bullish wave count. The double of super cycle B is joined by a completed corrective structure in the opposite direction labelled cycle X, which subdivides as a regular contracting triangle. And here cycle wave Y may be complete as a zigzag subdividing 5, 3, 5, ending at resistance at the upper edge of this best fit channel, and prices reacted down strongly from there. A new low by any amount at any time frame below the confidence point would add a lot of confidence to this wave count at all time frames. At the daily chart level, here's the end of cycle X and the start of the zigzag for cycle Y, subdividing or labelled A, B, C, with a triangle in the B wave position. This movement may be over. A new downward trend may be underway, but I want to wait for the confidence point to be passed before I have enough confidence to calculate those very low targets for you. If supercycle B is over here, then supercycle C should subdivide as a 5-wave structure, should unfold over several years. This wave count expects a major trend change to a new downward trend to last years happened back here. Within the new downward trend, no second wave correction may move beyond the start of its first wave. This best fit channel isn't really showing where price is currently finding support and resistance. It was breached with Thursday's little candlestick, but now Friday has closed back within the channel, so the significance of this trend line is greatly reduced. But this trend line, copied over from the weekly chart, still has reasonable significance. If the bounce continues higher, I'll look for resistance about this line. At the hourly chart level, here's the first 5 down of this possible new trend. This correction could be a regular flat correction, subdividing 3, 3, 5. Minute C to complete as a 5-wave structure may find resistance at the upper edge of this Elliott channel. Draw this channel on the hourly chart from the start of A to the end of B. Place a parallel copy on the end of A. When we draw the channel in that way, it perfectly shows where this downward movement found support and strongly bounced off. So it looks like the channel is correct. So I will expect, in the first instance, resistance at the upper edge of this trend line. That may mean that the expected end of the bounce about 1529 may actually be somewhat optimistic. Price may not be able to get up to that point. It may stop when it finds resistance at this trend line. Sometimes we see a little overshoot, not a big one, for the end of a C wave of a flat correction. At the weekly chart level, this is the bullish wave count. If the bear market for gold was over back here in December 2016, and if you want to see any kind of bullish wave count for this market, you have to resolve the problem of seeing this as a 5-wave structure. It absolutely doesn't look like a 5, it looks like a 3. Gold will often have disproportionate second and fourth wave corrections within its 5-wave impulses. There are good examples here and here on this chart. Because it's a commodity, it will exhibit swift, strong fifth waves, and that tendency of commodities is especially prevalent for fifth waves to end third wave impulses, and that forces the fourth wave that comes just prior and just after to be relatively brief and shallow. It gives gold's impulses a curved 3-wave look, with a time-consuming and deep second wave and a quick, shallow fourth wave. We see this here, we see it again here. But this is the other way around, a very time-consuming, wide-ranging fourth wave and a very quick little second wave that covers a much smaller distance in terms of price. This is extremely unusual. It's not unprecedented. It can happen, so I'm publishing it. It's just highly unusual for this market. It's not so bad when you see it on a smaller time frame, like an hourly chart level, but when you see it this big at this higher time frame, it really is a major problem for the wave count. And so that has to drastically reduce the probability of any bullish Elliott wave count. That problem simply cannot be resolved, well, not that I can see. If cycle wave 1 is over here, then cycle 2 may be complete here as a double combination, no problems with this structure. Zigzag, X, expanded flat, subdividing 3, 3, 5. Cycle wave 3 may only subdivide as an impulse, and within it primary waves 1, 2 and 3 may be complete. Primary 4 may be continuing as an expanded flat. Here's a good example of an expanded flat. 3, 3, 5. The B wave moves beyond the start of the A wave, and then the C wave moves beyond the end of the A wave. I expect that may be what's happening here. Primary 4 may not move into primary 1 price territory below the invalidation point. Let's take a look at this at the daily chart level, where the high of primary 1 is this point here. Here's primary 2, primary 3, and now primary 4. Primary 2 was a relatively deep zigzag. Given the guideline of alternation, I'm expecting primary 4 to be a relatively shallow flat, triangle or combination, and it looks like it is unfolding as a relatively shallow expanded flat, subdividing 3, 3, 5. Intermediate C needs to move beyond the end of A to avoid a truncation. It hasn't done that yet. At the hourly chart level, here's the end of minor 1 within intermediate C and minor 2. Now I'm considering a different structure for the second wave. Both Elliott wave counts at this stage expect that this movement is a second wave correction that's incomplete, and so I'm using both hourly charts to show you two different ways of labeling this movement. If it's a double combination, there could be a zigzag complete for minute W. The double may be joined by a complete 3 in the opposite direction, labelled X, which subdivides as a zigzag, and the second structure in the double may be an incomplete flat correction, subdividing 3, 3, 5. For minute Y to end reasonably around about the end of minute W, or possibly bringing minor 2 up to the 0.618 Fibonacci ratio. Minuet C needs to complete as a 5-wave structure. So far 1 and 2 could be complete. We need to see 3, 4 and 5. At the weekly chart level, there was this very highly technically significant break above multi-year resistance back here at 1375 should now offer very, very strong support. Price moved up and away with a very small quick backtest of support, and now up here the trend became very extreme. RSI was reasonably overbought, and then we saw a candlestick reversal pattern in this dark cloud cover candlestick on the weekly chart, which had support from volume compared to the week immediately prior. And that was followed the next week by another quite bearish candlestick pattern with a very long upper wick. So we've got two long upper wicks and a candlestick reversal pattern within a very extreme trend. When trends become very extreme and then we see candlestick reversal patterns, we should take those reversal signs very seriously. But candlestick reversal patterns don't tell us what the direction of the new trend is. There are three different directions for price: up, down, or sideways. A candlestick reversal pattern tells us that the prior trend is reversing, but it doesn't tell us in this case if the upward trend is reversing to a new downward trend or a big sideways consolidation. Either could relieve extreme overbought conditions. A couple of weeks of downward movement, and this week also technically downward movement, a very slight lower low and a definite lower high. Volume within the week, the balance of which was upward, is not supporting upward movement within the week. The last signal from on-balance volume was bearish. It's a rather weak signal though, because there's quite a strong slope on the trend line that was breached. We've already been over ADX. It reached very extreme for that trend. ATR finally managed to show some increase after price broke above resistance. We've been over RSI as well. Stochastics now returning back into neutral. And MACD remaining full bore bullish. At the daily chart level, it looks like there has been a reversal. Again, we can't tell if this is going to be a new downward trend, which is what my bearish Elliott Wave count expects, or a huge big consolidation to relieve extreme conditions, which is what my bullish Elliott Wave count expects. But we can see that this bearish engulfing pattern just after the high from gold is an extremely strong bearish reversal candlestick. Engulfing patterns are the strongest of the candlestick reversal patterns, and this one engulfs 7 prior real bodies. That is particularly strong, and it has good support from volume, so we need to take that very seriously. It looks like after some downward movement, price is now moving sideways and maybe tracing out a pennant pattern. This could also morph into a flag pattern. For now, a target calculated using the flagpole and the breakout point from this possible pennant is about 1415. That's lower than my Elliott Wave targets are expecting. Overall, as price is moving sideways, volume is declining. On-balance volume is constrained. Let's watch this one carefully for a breakout next week. RSI is neutral. There is again room for price to rise. There's also plenty of room yet for price to fall. ADX hasn't caught up with the change yet. It told us the previous upward trend reached very extreme as it was above both directional lines and above 45. It's now declining, and that in conjunction with the candlestick reversal pattern tells us to expect a trend change to either down or sideways. A sideways consolidation would be required probably to last a few more weeks to relieve extreme conditions before another upward trend may be ready to develop. ATR is now flat as price moves lower. Stochastics back in neutral territory. MACD remains bearish. That's all from me with your gold analysis this week. I hope all of our members are having a most awesome weekend.